investor friends, I'm michellemarki, and it's that time of the quarter where we get to know what some super investors have been buying and selling between April through June 2022, which is also known as the second quarter. And usually investors that have assets under management of at least $100 million have 45 days after the end of the quarter to report what their holdings are in a form called the 13F filing with the SEC. So a lot of people are tuned in to what some of these super investors activities have been, because it can give us clues as to what the direction of some companies might be if some of the best investors are invested in them. And it also gives us food for thought if we're also interested in the same companies and what might be some good stock prices to pay for them if we also want to invest in these same companies. And so the investors that I'm going to talk about today include Warren Buffett for Berkshire Hathaway, Charlie Munger for Daily Journal Corporation, Mohnish Pabrai, Spier, Lee Lu, and finally Bill Miller as to their Q2 2022 13F filings, and also maybe what some of their other equity holdings might have been that aren't on 13Fs if they've had some international holdings. So for the one that pertains to, I'm going to talk about that specifically. But otherwise, if you also enjoy following along with some of the best investors, please be sure to like and subscribe to my video and YouTube channel, because I think by studying some of these super investors, we're bound to become better investors ourselves. So thanks, and let's get into their 13F holdings. And starting with Berkshire Hathaway, that had the second most amount of activity out of these six investors I'm talking about today, it seems like even though they were pretty active during the second quarter, they weren't as active as they were in the first quarter this year. And it looks like they're meaningfully slowing down and doing buybacks of Berkshire Hathaway stock, where in the second quarter, they only did $1 billion worth of buybacks. And I'm pretty sure from what I remember Buffett saying at the Berkshire Hathaway annual meeting in Omaha at the end of April, that they only did buybacks until April. So most likely, I'm guessing that they didn't do buybacks much in May and June, that it was mostly done in April when Berkshire stock was still trading north of $330. So I'm guessing when they put $1 billion, it was when Berkshire stock was probably between $330 to $350, and not where it was kind of going below, where it went as low as about the high 260 range to low 270 range as we hit the end of June and early July. But July is already part of the third quarter. So I'm guessing that there wasn't much of buybacks at the end of June, but rather more so in the beginning of April when their stock was pricier. And also Berkshire still has about $105.4 billion that are in cash and equivalents that they can use to buy other stuff with. So compared to the first quarter, that only went down by a net of about $850 million, which means at the end of the first quarter, they had $106.2 billion. So really, Berkshire didn't really buy nearly as much if you really think about it, even though they still had some meaningful purchases and sells that I'll talk about shortly. But overall, I estimate that they had about $4 billion worth of purchases in the second quarter, and also about $1.4 billion of sells in the second quarter. And so if you combine the sells with the buybacks, that's a little bit of a wash. So basically, I estimate that Berkshire Hathaway on the net may have purchased about $4 to $5 billion worth of equities, depending on how much the stock may have declined in values based on the market values at the end of June 2022. But overall, that's what we're kind of ballparking right now. And so what this shows to me is that out of the stocks that Berkshire bought, they only had 9 buys in the second quarter and 6 sells in the second quarter, compared to having 15 buys and 7 sells in the first quarter. So even though they had less activity overall, they still had a decent amount of buying activity, more than they were selling, but they did sell more in the second quarter compared to the first quarter. So overall, I think that Berkshire is trying to slow down in its purchases because maybe they're seeing the writing on the wall with how inflation is hitting on companies' earnings. And even though they basically bought a lot of the same that they bought in the first quarter, and they also sold a lot of the same that they sold in the first quarter, I think that generally they're kind of just taking it easy and maybe waiting for more buying opportunities ahead. And among Berkshire's purchases in the second quarter, the following are just my estimations looking back at what I'm guessing are some likely purchase prices that Berkshire might have paid, but some of this could be totally off or maybe around the ballpark of what they probably paid, because I know Buffett likes to get a pretty good deal. And so Berkshire put the most money into energy stocks, where they put maybe about 1.3 billion into Occidental Petroleum, followed by about 360 million into Chevron, and their favorite big tech of Apple, where they probably put around 550 million, where they probably paid maybe in the low $140 per share range. And maybe Buffett's okay with getting about a 22% discount from Apple's all-time high of $183 per share, and that's a good enough discount for him. And then they also put about $840 million into Ally Financial, a bank stock, and also they put $315 million into Activision Blizzard. So clearly they want to get more of that arbitrage deal where Microsoft is probably going to be able to buy out Activision Blizzard. So they went more into that one, as well as they put another $265 million into Paramount, which is also behind CBS and other media properties. And they also put maybe another $180 million into Celanese, which is a chemical materials company. And they put some into McKesson and Markel. And even though it isn't that much that they put into Markel, what that signals to me is that they're showing a growing faith in what the CEO Tom Gaynor is doing at Markel. And I'm guessing that they bought more of Markel between the range of $1,300 to $1,400 per share. But there were some pretty on sale prices for Markel lately, dipping into the $1,100 to $1,200 per share range. So probably, if I had to guess, Berkshire might buy even more of Markel in the third quarter. And among the next three super investors I'm going to review, they didn't really have that much meaningful investing activity, if any at all, during the second quarter. And with the Daily Journal Corporation that Charlie Munger oversees their investing activities, besides reducing their Alibaba stake by half in the first quarter, they didn't do anything in public equities in the second quarter. So it seems like Daily Journal is just waiting for future stock buying opportunities. And knowing Charlie Munger, he's waiting for a really good deal before he were to buy much in stock. So there's nothing really to see there. And then with Mohnish Pabrai, he's basically mostly cashing out of Seritage Growth Properties, as that's barely a position left on his 13F filing, and he left his Micron position unchanged. And according to Ticker, out of his 8 positions on there, and a lot of those are international positions, he only had one additional buy in the Rain Industries holding that they had there, and that wasn't that much. And they had some reductions in a couple of their other international holdings in the Nice Holdings and also Shinokin Group. So besides the few reductions that Mohnish Pabrai had, he also didn't have that much investing activity, and it seems like his portfolio only has about 36% invested if he only is invested in about $275 million worth of equities, compared to a portfolio size that could be as much as a total of $750 million, which means that maybe 63% of that portfolio is either in cash or in private equity investments that we can't really know that much about, unless you have some way of knowing. So feel free to let me know in the comments. But otherwise, it's a little bit of a mystery what Mohnish Pabrai has been investing in lately. And then finally with Guy Spier, he didn't really buy anything, so his 13F filing just shows 12 stocks that he has, but he showed no faith in whatever's going on with Twitter because he sold out of that stock entirely. So I guess he doesn't believe whatever story either Twitter's management or Elon Musk is telling the public, because he doesn't want to be part of it at all. So out of all these guys, what I'm thinking is that they're probably waiting in cash to buy stocks on sale in the future. And with Li Lu, who is known as the Warren Buffett of China, in the Himalaya Capital Management's 13F filing, we can only see the American equities that it holds and not any of the Chinese investments. But focusing on what it does hold as far as American companies are concerned, we can see that Himalaya bought a lot of Alphabet stock in the form of its 2 ticker symbols, Goog and Google, where he bought way more in Goog ticker symbol with about $333 million worth to about $103 million worth of Google. And so total, that's at least $436 million worth. And it could be up to $500 million that Li Lu may have invested in Alphabet. But overall, it looks like that was a meaningful addition to the portfolio of about $1.87 billion worth. And even though it looks like there's 6 stocks, it's really only 5 stocks. And so Li Lu only seemed to buy Google in addition to the other holdings of Apple, Berkshire, Micron, and Bank of America. And then if we look at what Bill Miller has been up to, it looks like he's had way more activity than a lot of these other investors. So it's sort of breathtaking how much of a diversified investor Bill Miller is. But what I found very interesting was his position in Alibaba used to be his 9th biggest position out of 88 positions in the first quarter. And then that jumped into his number 1 position out of 82 equities in the second quarter, even though he reduced a little bit in Alibaba in the second quarter. But overall, it still was his biggest position at 5.25% of the equities in the Bill Miller Value Partners portfolio, which is really impressive because you wouldn't have expected that Bill Miller would let Alibaba be his number 1 position, but it just so happens to be. And overall, he had way more sells in the second quarter than buys, where he only bought 32 equities compared to selling 55 equities. So overall, it looks like Bill Miller turned really bearish in the second quarter out of his almost $1.8 billion portfolio. So I found that really interesting to note as well, what Bill Miller seems to be going in and out of lately. And I also wanted to mention my guess as to how much Li Lu paid for the Alphabet stocks on a per share basis, where I'm guessing he might have paid anywhere between $2,200 to $2,300 on a pre-split per share basis, because Google didn't split until July 15 in a 20-to-1 ratio. So that's the pre-split prices. And then if we're looking at it from the post-split prices, that could mean that he could have paid between $110 to $115 per share, or even less than $110 per share, which I'm guessing would have been a pretty good deal because Google seemed to bottom out at about $105 per share. So for those of us who might be wanting to get into Alphabet stocks, maybe we want to look at a share price between $105 to $110 per share as maybe a good on sale price if we can get it at a price even lower than what Li Lu might have paid. And so what do you think? Let me know in the comments what you thought about these super investors buying and selling activity throughout the second quarter. I'd love to hear from you. And if you enjoyed this video or learned something, please like and subscribe, and I wish you well on being the best investor you can be. Till next time.